I think it's spitting in the ocean, Rob. I mean, I really, truly do. And, you know, let's just talk about practicality. In terms of the distortions in the economy, they all center around these ultra low interest rates and easy money that have created misallocations in resources and anomalies, if you will, or dislocations in price. And so when you talk about inflation at 8%, and which, as we've talked about before, greatly understates what the real level of inflation is, what the real level of inflation being closer to 15% when you talk about food and energy and housing. John Williams has talked about that. But even at 8%, in order to find equilibrium in the marketplace, you would have to raise interest rates above the rate of inflation, call it 8% on the federal funds rate. You then have equilibrium where inflation and interest rates net out at zero if, again, we believe the CPI numbers. But at 8% federal funds rate, you'd have 11 or 12% on a 30-year mortgage. You can imagine what would happen to the real estate market. It would go poof, like a puff of smoke. At the exact same time, the bonds in circulation would lose upwards ends of 80%, poof, like a puff of smoke, which would kneecap the stock market. It's your great reset. If they really wanted to get tough on inflation, you don't raise interest rates a quarter basis point or 25 basis points, rather, a quarter of a percent. That's just, it's almost insulting as far as I'm concerned, to be honest with you, because I don't think it's getting tough on inflation at all. It's acquiescing to the narrative. It is trying to pretend that we're getting tough on inflation. And what it really is to me is enabling them a little more wiggle room as the last vestiges of the world reserve currency, drip by. In other words, you can't go nominally negative with the world reserve currency. And when you're starting at zero on the federal funds rate, it's pretty darn easy to see that they're out of wiggle room. So they have to raise it just enough to give them a little bit more wiggle room to come back in and shave off some of the ridiculous hikes that they're making, which are, nothing. Instead of having no options whatsoever when things get tough and having to go nominally negative. I mean, it stinks of desperation as far as I'm concerned. When Paul Volcker wanted to get tough on inflation, he rose rates to almost 18%, and it kneecapped inflation. It kneecapped the gold bull market too, because in economics, the term Gibson's paradox comes to mind, which speaks of the inverse relationship between real interest rates, not nominal, real rates, and the price of gold. So in this case, raising the federal funds rate to 0.25%, factored against 8% inflation, or call it 10%, 2% on the 10-year Treasury. We're not even there, but even call it 2%. You're still real -6, and gold, which is a rock that doesn't pay any interest, sure beats the hell out of -6% from where I come from. So, anyways, I just think that it's token. It's nothing more than token placating to a narrative that has the media saying, well, they're getting tough on inflation. You know what, Rob? It's a bunch of bullshit as far as I'm concerned.
Yeah, I hear you about the theater aspect of it. And I agree. If you raised rates on bonds to 8 to 10%, the amount of zombie companies you'd create in the United States would instantly probably triple to quadruple. And we're already, according to the BIS, and I showed this last month, we're already at the highest rate of zombie companies in the world, across the world, we've ever had. And the BIS's own index shows that it's the least likely, since they've taken this index the last 20 or 30 years, that these companies are going to be able to recover. So in other words, we've got a lot of default. That's calling default. The BIS is calling massive defaults on a scale we've never seen before across the world. And if we raise interest rates to 8 to 10%, debt service gets really expensive to corporations. Those zombie companies spike. We're talking massive losses across the indices. You're talking people are not going to be able to pay their credit cards. You're talking people won't be able to buy homes. You're talking the U.S. is not going to be able to service its debt. I mean, that could be catastrophic. So what do you think the point of is raising this? You mentioned the media aspect and the kabuki theater aspect of it. Why do you think why do you think the Fed is doing it? Is it to absolve themselves of blame of the coming crash, do you think?
Because I think that that's what this has boiled down to. It's boiled down to the fact that the numbers are paint a very bleak picture, and so it's just kicking the can further down the road and making it seem as though they're getting tough in one respect over another. In other words, it's either they acquiesce to the reality that it's either inflate or default, or they pretend that they're going to get tough on it and that there's a middle ground. There really is no middle ground at this point. And what, there are events happening right now in Saudi Arabia that I think will only hasten the demise of the dollar. In other words, they've painted themselves so deeply into a corner, Rob, that I think that this is the only thing that they can do is to pretend that they're getting tough on inflation. Because put yourself in the place of another country who buys our bonds or accepts our dollars for goods across the globe. You're accepting paper from an insolvent government who's running massive amounts of inflation, who's sitting on top of over 100 trillion in debt, 30 of it on balance sheet, over 100 off balance sheet, Medicare, Medicaid, Social Security, government, military pensions, and whatnot. And I think you're looking at a government or people are looking at the dollar and our treasuries as a vehicle that is not compensating them anywhere near enough for the risk associated with owning it and or the loss of purchasing power through inflation. And so I think that they have to pretend that they're going to get tough on that, or it just sends a clear signal that really that we're out of options and we have chosen what all governments and all politicians have done, really going all the way back to the beginning of time, and that is inflation over austerity. And that is really what they're trying to avoid, is that the realization that we are out of options, we are backed into a corner, and because all of the three pillars of wealth, stocks, bonds, and real estate, are at all-time highs, inversely correlated to a rise in interest rates, the question only has to be asked, how far can they push it before it all implodes? And the answer really is no one exactly knows, but I think they will walk the tightrope and realize that if they really do want to get tough, it is the beginning of the end for the way of life in this country, as all of the assets in this country, all of the big money in this country will have a religious experience when that moment happens. And quite frankly, I think that the market is positioning itself to make these moves on their own, regardless of what the Fed has to say about it. It's one thing for the Fed to buy the back end of the bond market to try to keep interest rates low. It's another thing altogether when the world starts to shed U.S. dollars, and I think that day is coming. And we can talk about that. You and I were talking briefly about that off air here, and I think that's really the most important news event I've seen in quite some time.
Yeah, it's that Saudi Arabia is now cozying up to China and even Russia and trading outside the petrodollar, not trading oil for dollars, trading in whatever currency, gold, whatever. It's reported on Zero Hedge, as you mentioned, off air, and then a couple other websites I saw it reported as well. It's being reported internationally more than it is in the U.S., let's put it that way. This is the end of the petrodollar. We saw this coming. We've talked about it, you and I and a lot of other people on the program, for a long time. How, one of my friends who was in the Navy said, Rob, it doesn't matter because we still have the military. But if you look at, I don't think the military is a deciding factor now. If you look at what Russia's doing and how China and Russia built up their military and all the trade agreements they got, I don't think it's such it's such a sure thing that the U.S. military is going to keep alive the petrodollar.
No, I don't think
is it the end? Yeah.
Well, I don't know. I mean, let's just talk about it for a minute. First of all, from a broader perspective, when you look at the sanctions that the U.S. has put on Russia, the way that I look at that is that the world reserve currency is supposed to be for everyone to use, period, not decided by a regime that can penalize you and kick you out of the SWIFT system and kick you out of using the dollar. What you are doing is is hastening the demise of the dollar and weaponizing the dollar to the degree that you are pushing Russia right into the arms of the Chinese and their CIPS system, CIPS, the cross interbank payment system, which mirrors the SWIFT system, a country that already has the Shanghai Gold Exchange, which mirrors the COMEX, a country which already has the Yuan bond, which is immediately convertible into gold. This is a bond, and gold off the Shanghai Gold Exchange. This is a bond denominated in yuan that the Chinese sell or use to buy oil and gas from other countries like Russia and Saudi Arabia or Iran, not Saudi Arabia, but soon to be, but Iran, and usurping the dollar in settlement. You have the new Yuan, the digital currency that is being used to connect the Belt Road Initiative, 75% of human population. The pegs are in place immediately to flip the switch, and bang, you've now just sidestepped the U.S. dollar. But when we talk about the PetroDollar deal, look, the minute that happened, I looked at it as the biggest story of a long time. And that was in September, the day we left Afghanistan with our tail between our legs. Russia announced a joint military cooperation agreement deal with both Saudi Arabia and Nigeria. Now, those are the two biggest OPEC producing countries in the world. It became very obvious to me because what has enabled the dollar to be the world reserve currency since 1974 is our protection of the Saudi kingdom. And I think that you can see by us pulling our Patriot missile battery from Saudi Arabia, by naming them in the 9/11 report, I think they're not happy with us. So they basically signed an agreement for protection from another nuclear power superpower. And it's their way of saying, we're now going to take oil in other currencies, or it's coming. I think that day is coming. And when you see, and I've been saying this since September on almost every podcast, that is the nuclear moment where everything goes upside down, where the Fed can't control a mass dumping of dollars, what that would do to interest rates. And I think that's coming because it said today that China and Saudi Arabia are working on a deal for where Saudi Arabia will accept and OPEC will accept yuan in exchange for its oil. It is our protection of the Saudi kingdom that has enabled us to be the world reserve, because Saudi agreed to sell their oil globally only in U.S. dollars since 1974. But this comes back to exactly the problem that the Fed is in. They are an insolvent government running massive levels of inflation. And if you raise rates to compensate properly for the oil that you're being paid in dollars, which is losing massive amounts of purchasing power through inflation, you blow up the whole system. So they can't. And the world is catching on to that. And Saudi Arabia is basically calling the bluff and saying, well, we call, and we're going to use other currencies. And that's when the all-in bluff gets called and the whole house of cards falls. When you see mass dumping of dollars because you are forcing the hand of other people to sidestep the dollar and settlement of oil, it is the beginning of the end of the whole system.
I agree with you. So I think we say hello, central bank digital currency era, digital yuan. Everybody's planning for it. I think the IMF put out the position paper. The BIS has endorsed the central bank digital currency era. I think account is now over 50 central banks around the world, including the biggest ones, are on board. And that's what's coming. So they know it's coming. And it's just really managing the fiat dollars and euros and stuff until it collapses. Suppose a couple of years from now, we're starting to use central bank digital currencies, Andy. What does that mean for, holders of gold and silver? Are we the only ones that are independently outside the system? And if so, what do the governments think about that?
Yeah, well, it is the only escape from the matrix. And that's what I think about when I think about the central bank digital currencies. For the record, I also truly believe for a central bank digital currency to work, it needs to be pegged to gold. And what better way to do it than by using a distributed ledger to peg or denote the veracity of it. And I think that is the ultimate plan of the BRICS nations and Chinese and Russia in particular. You want to spell the end of the U.S. dollar. You want to beat the U.S. without firing a nuclear missile. That's how you do it. That's how, the U.S. thinks that they can throw around all these sanctions and have effect. Well, what if the sanctions are thrown back on them? And those sanctions are a new digital yuan, renminbi, ruble, and also rupee. You get this whole, Eastern Bloc environment that the dollar's not wanted or part of. And I think they would peg it to gold. And that's when you see gold go into levels that people think unimaginable and never coming back down as a result of it. So I think what gold gives you is, in terms of anonymity and outside the system, absolutely. It's the only thing that does give you that.
Yeah, and if people don't secure their gold and silver, Andy, what other options are they going to have realistically?
None.
I mean, there are the private cryptos. There could be a black market economy. You could see states are already standing up to the federal government, so then states may issue, may reduce or eliminate taxes on gold and silver, effectively allow it to trade alongside whatever currency the national government's issuing. But are there really enough people involved in that to actually make a working black economy or sub-economy, if you will?
Well, you and I and all of us listening to this are the pimple on the elephant's ass. That's the truth of it. And the pity of it all is that, you try hard to be noble and help your friends and whatnot, but look at the message that this conveys. It's a dark one. It's not one that anyone wants to ever have as they're sitting around a keg of beer eating hamburgers, because you're never going to get invited back to that party ever again when you start talking this way. And so most people are going to be caught off guard, because the part that they're not figuring is that everything that they have that makes them feel wealthy, they talk about the wealth effect, your 401k and your house. Well, not only that, what about the pensions and the insurance policies? Where is all that money invested? It's in stocks, it's in bonds, it's in real estate investment trusts. If a moment like this happens and you see a transitioning away from the dollar by a good portion of the world overnight, it is over for this country. People will be out in the cold so fast. Look, Rob, getting product has become next to impossible. And I've been saying this for a long time, and everyone thinks, oh, he's talking his book. Look at every online company in America right now. The premiums on Silver Eagles were already high as hell. They went up 50% in the last 10 days. And look at the premiums on junk silver, $6 or $7 an ounce over the price of silver. Doesn't seem like junk to me anymore. Look at the premiums on fractional gold eagles and 1 ounce eagles. They're going much higher. We're now transitioning into gold. Everything I've been saying about supply is coming true, because this is now a global deal. The world is waking up to what the U.S. just did. And they're thinking, am I next? What Trudeau did. Am I next? Could my assets be frozen? Could my 401k be locked out? Could my bank account go bail in? Could my money market get gated? I mean, yeah, the answer is yes. And to think it won't happen is naive, or possibly happen. And so you have a mass exodus out of banks and currency globally into precious metals. And it's just like price inflation here in the States. You have more money chasing a finite amount of goods, and you see price inflation and supply chain distortions. That's exactly where we are right now in this industry. And when you talk about people being out in the cold, this is why people never succeed. This is why guys like Rick Rule have made a fortune in life, because they buy when everyone else is bad-mouthing. And he loads up on shit when the price is cheap. And then when it becomes obvious that it's time to go, he's the one selling. And already sitting on the mezzanine, sipping champagne when everyone else is scurrying just to get out of the rain. And that's really the truth of it, is that there's such a small pool of metal that I just think that when it becomes time for the people to wake up, it's going to be way, way, way too late to get any product. Honest to God, I think that is number one biggest issue that this industry faces.
Yeah, I agree with you. And we try to help out with the education, but honestly, I mean, we're not the biggest financial channel on YouTube or Twitter. We're small guys. We're making a dent, but we're largely followed by people who are already in it or considering in it. the reach for us to get the reach outside to the greater outside world is often difficult given the platforms we have. So we're doing things this year to expand our reach, and we'll announce those in the next few weeks. I'm launching a new site that's going to appeal to a much bigger group of investors, and we'll bring them into gold, silver, and a lot of other investments. That's coming. But Andy, it's almost like, we're spitting in the wind. So for those of us who kind of know, what's the next step for surviving what's coming? Obviously, there's going to be a big crash. Obviously, all the things that come along with that, it's a completely different show that we could talk about it. But what, you get your gold and silver, what else? Do we just sit here and wait? Or what are your thoughts on that?
This is where it becomes, where my credibility becomes into question, always in the back of my mind. And because I try to, when I think of answering questions like this, Rob, I think of what I would do myself. I think of what is the objective answer? And the objective answer is put all your money into gold and silver. Now, that sounds nuts, right? I get it. But let's just go through it for 1 second. We have stocks, bonds, and real estate all at all-time highs, inversely correlated to what? A rise in interest rates. You have the federal funds rate at 0. Well, either you go nominally negative or you rise. Now, they're only going to raise it so much. So a lot of us think, well, they can't raise it because if they do, then what happens? Everything collapses. So they choose inflation, right? Okay, so you inflate. The more inflation does what? Creates higher interest rates. Ultimately, both roads lead to the same place. Now, when you talk about Saudi Arabia accepting oil in Yuan, you're going to hasten that. When you push when you weaponize the dollar and push the Russians, who are the largest exporters of natural gas and the second largest exporter of oil in the world, all settling in dollars, you now are hastening the speed at which all of this happens. It's a vicious circle. Either you succumb to inflation, which ultimately leads to much higher interest rates, which blows everything up, or they raise rates and blow everything up first. It's either, one way or the other. We've slid too far down the rabbit hole. So where do you put your money? Well, if you leave it in the bank, you got bail-ins. You put it in the money market, you got gating. You leave it in dollars, period, you are road to inflation. You put it in stocks, it's the highest PE ratios of all time, factored against the lowest interest rates of human history. You put it in bonds, you're at the end of a 30-year bull market in bonds with interest rates can only go one way, higher or nominally negative. I mean, paint a picture. Where the hell do you put your money, Rob? I don't know. I don't know. Maybe you buy a farm and farm on it and don't care what you paid for it. But short of that, I don't know where else to put your money.
Andy, I have one thing to disagree with you there.
Yes.
I've got one thing to disagree with you on, Andy.
Please tell me.
I charted 7 or 8 months ago the bond market over time, and I'm talking, dating back to the Middle Ages. The bond market is in a 700-year trend of falling interest rates. So I want that to sink in for a minute. We're not talking a 30-year trend in the U.S. Worldwide, a 7 millennia trend. Is that right? 7 millennia trend? 700-year trend of falling interest rates.
One hell of a bull market, for goodness sake.
It has to go back up. We're talking a trend across nation states, across the greater financial system. If you think about economics and how it's developed from classical economics to Keynesian economics, what we're seeing is the end of this system that has been born over hundreds of years, dating back to how, back to how people financed, taking land from the king and giving it now to the new middle class. This is a huge trend. And at some point, all of this easy debt that's not only existed through America's history, but the whole fucking world, Andy, the whole fucking world has got to reverse. And that's why when we say this time is different, that's what we mean. It is a hundreds and hundreds of year trend across different civilizations, across the world, all coming together at one time. So if
That's
you're in bonds, I'm
exactly the point.
sorry, but you may be in the worst investment, long-term investment history at this particular point in time.
Well, who are the big investors in the bonds aside from the corporations? It's the
Yeah.
pension funds, it's the
Yep.
pensions, and the insurance companies. So, when you buy an
Yep.
annuity and they guarantee a certain rate, well, good luck guaranteeing a certain rate in this zero interest rate environment. And
Right.
and so where is the money? They're speculating in equity. So what happens if the stock market corrects? Well, I don't know. I mean, and so the point of it is that yes, you're when you talk about where to put your money, I see no other place to put it besides precious metals. And I know that a lot of people will say, they'll be turned off by that. But I'd like someone to tell me where to put it that's different, that offers anything in the way of return and a modicum of safety. You'll get some people say crypto. I get it. But the volatility in cryptocurrency is not something I think most people will want to put their life savings into. And not to say that there's not a place for it in a portfolio, but when you talk about big money and where to put it, for me, Rob, gold and silver is not an investment. And I've told you this before. I've been buying it as a promise to my father when we started our company. Every 2 weeks for 33 years, haven't missed a 2-week period ever. I buy it as wealth. Wealth that I hope I never need to use. I'm damn glad I have it if I need to use it, not just for an emergency, it could be an opportunity, because when all this breaks apart and price discovery becomes real again, where there's equilibrium in the economy between interest rates and inflation and asset prices, then you have dry powder that you can take advantage of. That home that you've wanted on a lake somewhere at 50 cents on the dollar, or blue chip stocks trading at single digit price to earnings ratios, paying a fat 6 or 7 or 8% dividend. That's when you can redeploy, or if not, you give it to your kids or to your grandkids and know that it will have value in the end. And so, I don't know, man, it's a good question, but I'll tell you that I think these are, when you talk about the theory of the Great Reset, from right here where we are right now, I could finish the book and show you how the whole thing resets. And it starts
Yep.
with Saudi Arabia and OPEC saying goodbye
I
to the
agree with you. I
petrodollar.
think sorry, Andy, you cut out a little bit. I was going to say, I think you're at the right place. You're out with Bix on his roadshow. That should be a lot of fun. I think you're in the right spot. I think what you say, I agree with you 100%. It's why I started Gold Silver Pros. I think I saw the same thing you saw. And, I think getting your precious metals is important. And people will come into the comments sometimes and say, all you guys do is talk precious metals. Well, why the fuck do I do that? The reason I do it is because only 0.5% of all the wealth in this country is in precious metals. I mean, I should be doing 6 videos a day trying to get people into precious metals to move that needle to 1 to 2%. But can you imagine when the collapse happens and only 0.5%, of wealth is in that stuff? How, first of all, how is it going to revalue it? But second, how many people are not going to be in? So I'm going to keep talking about it. I mean, I'm not going to stop. And if you guys are interested, of course, Andy has Miles Franklin. You can email. Is it Andy at Miles Franklin?
Yes, it is, absolutely. And
Okay.
make sure that you put Gold Silver Pros in the subject line, and I'll make sure that your listeners get the best price in America and my personal service. I just want to leave you with one other thought too, Robin, and before we go. And you always talk about the COMEX numbers. Look at how many contracts have been delivered just this month alone in silver. 50,000. You're talking 5 million ounces delivered off in silver just this month. That's not the biggest month ever, but it's pretty damn big. And those are the investors and the big money that knows what's coming. To take possession of 5 million ounces of silver. You're talking the family offices, the sovereign wealth funds, the big hedge funds. They know what's coming. The big money does. And so when that 0.5%, in that 0.5%, you have the 0.1% as well, who has already taken, the last 2 years to reposition quietly out of dollars using the narrative, anti-precious metals narrative, and the easy money practices to reposition out of the dollar into gold and silver.
Yeah, I agree with you. since silver squeeze of last year, early February of last year, the amount of available silver in COMEX, the registered, has dropped more than half.
Yes.
So we're talking people are taking silver off the market, and it ain't coming back anytime soon. And gold's been falling a little bit more steadily, but there's more availability of gold. Gold isn't used in industry as much. There's more there. But silver, to me, is the canary, Andy, because you've got industrial use of silver. You have less above ground available for people to get, and people are going to scramble for that first. I think what we're going to see coming is a massive scramble for gold eventually. It starts in silver. It's going to go to gold. And so if you're structuring your portfolio right now, for that reason, I would go silver first. I think they're both important, but I get your silver first while you can, because I think that becomes unobtainium a lot faster than gold.
I agree. We're also beginning to just start to see it in gold right now, because you're starting to see premiums on gold eagles go up and availability go down. And that's kind of the canary in the gold mine right there, the eagle premium and availability.
Yep.